Hello, welcome to this Fingraphs.com show on Dukascopy TV. Today we're going to talk about the equity market correction, which may have just started. To do so, we're going to go on our Fingraphs.com platform and first look at an investor's view of the mini S&P futures. An investor's view is a combination of a weekly graph for the perspective over the next few quarters, a daily graph for the perspective over the next few months, and an hourly graph for the perspective over the next few weeks. On the long term, for now, on the weekly graph, the S&P is still uptrending with a bull signal here. It is slightly extended in terms of targets, and with our envelopes touching each other here. The risk index is not quite overbought yet. It's not far, but seems to want to extend a bit further up over the next couple of quarters. So it's already an expensive situation, but this uptrend doesn't seem quite finished. Then on the daily graph, and we'll have more details on the Zoom in a few seconds, the daily graph is still uptrending and perhaps slightly overbought at the moment, hence our view that we have entered an intermediate correction. Then the hourly graph is starting to the downside in this correction. So first on the Zoom of the daily graph, as you can see, our envelopes were touching each other. We've pretty much reached the lower end of our targets, and the risk index was overbought. In such situation, we usually expect between 3 to 6 weeks of consolidation to the downside. We are quite positive on the long-term trend, so we'll probably use 3 weeks to start with, which means that this correction could probably last into mid, perhaps the third week of December. The corrective potential, in our view, is perhaps towards the 3,000 levels, which seem to offer interesting support levels that were previously resistance levels. Looking at the hourly, the correction may have started. We can see that for now it hasn't turned impulsive yet. It is still just a correction to the downside, but on this lower or on this higher hourly frequency, we believe it will probably turn impulsive over the next few days below 3,078 and then reach our impulsive targets to the downside, which we could calculate in the lower 3,000 levels. By that time, the risk index will probably be oversold again. Now let's have a look at Europe and at the Euro Stoxx 50s futures. The weekly graph is also here still uptrending, slightly overbought, but we do have still some potential to the upside on our targets, possibly up to 3,900, 4,000 over the next few quarters. The daily graph, which we'll have a view on the Zoom in a few seconds, is also probably on an intermediate top and correcting, and our hourly graph has started in this correction to the downside. Now, if you look at the daily, we can see that the risk index was very much overbought and has been since early November. The envelopes were touching each other, targets were pretty much reached, and here also we would usually expect between 3 to 6 weeks of a correction. The correction may have started in the second week of November here, may have started at the end of November. We also have a sweet spot towards the mid-December, third week of December, for the end of this correction. Also here, retracement down to 3,500 would probably match a previous resistance and new support, and would be interesting retracement levels. Then on the hourly, we can see that the move yesterday really made it below our corrective targets already, and this hourly is already pointing to impulsive targets to the downside towards 3,588 and possibly down to 3,545. So there's a more potential to the downside in the likes of pretty much 3% more, pretty much what we also saw on the S&P 500. The risk index is already oversold, yet it's an initial oversold condition. It could actually bounce and then continue lower over the next week or so. Finally, we look at the Swiss market index future, also on an investor's view. It is still uptrending on our weekly graph, maybe slightly expensive in terms of targets, but our risk index is still not overbought yet, so that leaves some leeway to the upside over the next few quarters. On the daily, we can see that we have reached our targets to the upside. Envelopes are touching each other. We are pretty much also in a situation of an intermediate top in our view, and then the hourly has started to correct down. So looking at the daily chart in the zoom, we can see the envelopes touching each other, the targets have been reached, and we are in an overbought condition. Also here, we expect between 3 to 6 weeks of correction to the downside, so possibly down to mid, perhaps third week of December, and with support levels around 10,000 here, where the previous resistance was during the summer. Then looking at the hourly, we did indeed go through our corrective targets to the downside. We are having a rebound today, but we believe that we'll possibly resume the downtrend over the next couple of days, possibly to reach down towards the 10,000 levels, perhaps slightly below, over the next couple of weeks. The risk index is oversold here, so you could expect a bit of a bounce, but which may already be happening at the moment. It's an initial oversold condition, so that may extend down over the next couple of weeks to the downside. So generally here, also about 3% of risk over the next couple of weeks. Thank you very much and have a very good week.